So let's try and see if in case we can do one illustration, okay, real life illustration. So I'm going to the web resource of National Stock Exchange, nseindia.com, and in this you can go to the derivative segment, okay, pick a company of your choice, okay, pick a company of your choice, say Reliance. So you have Reliance Industries, okay. You see it's a live market. We have also seen it in past. Expiry of March. There is one option here. If you see option chain, okay. Now this chain would give you all possible option which is offered by the exchange on this underlying. So on underlying of Reliance, all options are given at one place. Okay. So you see in this case, these are Reliance option chain. So this is Reliance, where underlying price of Reliance is, okay, 874. The underlying price is 874 as of March 11th, okay, closing. And you have all the strikes given. The strikes are given by the exchange. You see in this case, the strikes are given by the exchange. These are all strikes given by the exchange. So ranging from 600, okay, and wherein if I want to highlight the current, and it's in a difference of 20 rupees. So the strikes are defined at the difference of 20 rupees. So 870 is what you have, the current 874. So this would be where you'll see that this is around the market, okay. So all the calls which is below this, you see this, all the calls which is below this, now this is call, this is your calls, okay. So all the calls which is below this is in the money, they're sitting in profit. And that's why you see the price that has been asked, the bid and ask price, okay, the bid and ask price for these calls is higher, 149 or something. You see this, bid and ask rates are given here, okay, it's higher, okay. Now all the calls which is below or above the current market price, these are out of money calls. Out of money calls. Why? Because these strikes are not fetching returns as of now. Understand, until the market crosses this strike rate, it would not be in a position to be giving you profits. Okay, so you can build up a strategy by taking at the money, in the money, and okay, something like those type of calls. When we come to portfolio construction, in the sense that in portfolio theories we are talking of now that we have understood securities, we understood what our instruments are there in the market for buying and selling, and then we could identify when to pick them, when to buy, what would be worth picking, how to go about picking an equity, what equity. So the moment you start thinking of more than one securities, okay, more than one stocks, more than one investment, those situations in which you consider more than one instruments to invest into, what you hold is called a portfolio. So when you're considering investing, holding into multiple securities, okay, like if you hold Reliance shares, you hold Infosys, you hold TCS, you hold some bank deposits, in case maybe some corporate debt instruments. So when you're holding multiple set of securities, okay, is when we say you're holding a portfolio. Okay, so we'll talk about how a portfolio is constructed, what are the theory that goes behind identifying individual securities risk and return, and then a portfolio's risk and return, okay, and then an asset price. Certain models will discuss about how to price an asset. So how do we go about pricing an asset, in the sense that what is the expectation of a particular investment, okay. So the first thing that comes is to understand what is risk and return. So if you see in this case, when you plot risk and return on two axes, initially by adding, okay, see the criteria that goes hand in hand is higher the risk, higher the return. Okay, so the moment you look for higher returns, you need to take higher risk. Okay, but there would be a point in time, as this graph says, where this curve would flatten. That means by adding more stock or more investment or more securities beyond one point in time would not add to your returns, instead would add more to your risk. Okay, so that's when you say it's an optimum portfolio. That's when you say that this portfolio would be the best possible, or maybe ideally we look for a portfolio or an investment which gives you higher return at a lower risk. But then obviously as risk returns goes hand in hand, you could look for higher returns at a higher risk depending upon your risk tolerance level. But then there would be always a point in time when you will see that adding more risk is not adding more returns. Okay, this is the point we are talking here. So if you see in this case, almost the curve flattens, okay, wherein your risk is increasing but returns are stagnant. Returns is not going up. Okay, till certain point in time across this curve, you saw that you are able to, okay, get some amount of return at a given level of risk. Okay, if you are taking higher risk, okay, then obviously you will get some higher amount of return. Okay, so you will also get some higher returns. But then after certain point in time, you're only adding risk. Okay, you're only adding risk and there is no change happening in returns. Now project's feasibility study is concerned with the first 4 phases of project, that is planning, analysis, selection and financing. So when you're deciding on feasibility study, okay, this particular topic that we are talking of, then we are talking about planning, analysis, selection and financing. Implementation, review would happen anytime, which is every time you'll keep on seeing that, you'll every time be reviewing your plans, be reviewing your approaches. But then basically feasibility study is about planning, analysis, selection and financing. Okay, and it involves MTFE analysis, which you said is market, technical, financial, economic and ecological. Okay, so this is how we do the feasibility study. So let's try and take one and start with the first. Now this is a schematic diagram. Okay, this is a schematic diagram of a project. The preliminary study would be till so let me just try and highlight that for you, certain points that you would do an idea generation, okay, and then subsequently initial screening of your idea, and on the prime facie, if it seems to be promising, then only you will continue, otherwise you would terminate. Okay, if you see it to be fine, you'll continue, otherwise you'll consider it to terminate. Okay, only if you see that no, it's okay, it's feasible, it's appreciated, when you go. So if the answer is yes, you go for planning the feasibility analysis, okay, which could be on 2 fronts, by conducting market and technical analysis. Now both these analysis should give you a conclusive, okay, proof before you can do a financial analysis. So if both of them says yeah, the project is good, then do a conduct a financial analysis. Now this is the stage that we say is your preliminary work analysis stage. Okay, so this is the stage till when you should be doing it before actually committing your resource. Every idea would not result into a possible or an effective project. So there could be some idea which should not be appreciated, would not be screened properly, would not be screened in your favor. So you will terminate that, you will drop it. It's not that every idea would be implemented, but then you'll do all this study, preliminary work analysis study, before you actually commit to your funds. And only after that, once you see that things are all fine, you'll go to conducting an ecological and economical analysis, conduct a cost, and then if you see the project is worthwhile, you'll proceed further and you'll prepare your funding proposal before you go and raise funds. Okay, now if you see here that no, my project is not worthwhile, so again you terminate it. So this stage that we say evaluation stage is where you can probably be apart from the feasibility study in the sense. So feasibility study would probably include till financials, and then ecological and economic ecological study would encompass, okay, once you see that there could be some factors, some governing factors, some ecological factors that would probably make your project acceptable or not. Okay, so this is your project feasibility studies schematic diagram. Okay.